Brought to you by Agilus Diagnostics.
हेल्थ टेस्ट की बात आती है तो मैं भरोसा करता हूँ इंडिया's largest diagnostics company, Agilus Diagnostics. खुद को टेस्ट करते रहो.
No, we've already seen a lot of foreign portfolio investment leave the Indian markets. Now with Trump putting so much emphasis on manufacture in the United States, it's likely that some of these FIIs feel it worthwhile staying in the US. The BSE already below the 80,000 mark. How do you see the outlook for the Indian markets in the medium, short and long?
Well, the problem that's happened around the world, if you look at the last, I'd say, and this predates even the last few months where we've seen a lot of foreign selling, is that the last 15 years really, the post-global financial crisis world, from a financial perspective has been entirely dominated by America. That today, if you look at America today, its economic size in the global economy is about 28% or so. But if you look at the stock market indices around the world, 60%. America is now approaching 65%. So it's been a last 10 to 15 years where America has totally dominated as a financial superpower because, and a lot of American investors and everyone feels that if we have to get global exposure, we might as well buy these Microsofts and Google and stuff because they're getting their exposure from international lot now. So I think the big challenge that India and other emerging markets are facing, and this is something which I sort of encounter as well, is that there is zero interest in international in America today from an investing perspective.
Zero interest?
Absolutely. Nobody, because they look at the returns of the last 10 to 15 years and they feel that the American stock market has given us these incredible returns. No other country in the world has been able to stand up to it. India is the best performing emerging market and its returns are barely the same as America. But obviously people see much greater risk in going abroad. So they don't feel that you're being compensated enough for the risk that you're taking. So the real challenge is that when will this turn? So I think that unfortunately we're in a paradigm today where you need something to crack in America, which is that because of the fiscal situation they have, where they're running these massive budget deficits, if, or if the dollar starts to weaken because people begin to lose confidence in America's ability to finance its deficit, unless something like that happens, America and the world is going to remain very obsessed with just US investments, and the prospect for foreign flows coming into these countries will remain pretty grim. Now, I'm hopeful that this can't continue. How can one country be 65% of the world's stock market capitalization? Something will happen to change it.
And we see what kind of time frame? Because there are a couple of factors at play. One, we're seeing countries like Russia, China work towards de-dollarization, trying to build up what they call like a purported BRICS currency. Those ideas have never really worked in the past. Could they potentially work? And the fact is, post the sanctions on Russia, there's now genuine concern about keeping a lot of your foreign exchange outside in dollars because you can't really trust the United States, and that's weighing on minds in Beijing and elsewhere. So how do you see this play out? The fact is that the US is running up incredibly high deficits, and both Harris and Trump, if they were aligned on anything, it was on the need to continue government spending.
Exactly. So I think this process of moving to a currency away from the dollar is a very long-term process. That started. I think that, with the sanctions on Russia and stuff, that process started, where countries felt that we can't be that dependent on the dollar, from a economic system. But I think that the real issue is going to be that when is the global marketplace going to start caring about these incredible American deficits? And the data here is really staggering, which is the fact that America today is running a budget deficit of more than 6% of GDP. There is no other developed country or OECD country, as they call them, which is running a budget deficit as large as America today. Now that in the short term is artificially boosting economic growth. When you run such a large deficit and stuff, it boosts like economic growth. But when is the attention going to turn that this is not sustainable? If any other country in the world today was running the kind of debt and deficits that America is running, and where the trajectory just seems to be so sort of high, that country would be in trouble. And every other country in the last few years has faced some sort of backlash from the bond market whenever they've run such high deficits. It used to be said that this is an emerging market problem, but no, UK, France, where the budget deficit has also been approaching 6% of GDP, they've been facing a lot of pushback and they've been increased taxes and cut spending. So I think that the key issue for the next year is going to be that when does the American bond market say, and that's the only check and balance today left on Trump, in a way that you can argue that given the mandate he got, there's no check and balance really left in some ways, because now the Congress is totally aligned with him, with both the House and the Senate likely going in his corner. Some people would make the argument that even the Supreme Court is ideologically more aligned with him. So I think the untold story of this election just now is that there's only one check and balance in a way which is left. And that for me is the bond market. That when does the US bond market...
What's your understanding of bond traders? I mean, usually they're very vigilante like
Exactly.
in other countries. Do you think they'll get more
I think so.
vigilant about what's happening in the US? Because they also print the dollar, so they have that advantage.
Exactly. But that advantage, I think, is, has already been used up. Which is the fact that, that there's a limit to which you can keep doing this. America used to run budget deficits about 3% of GDP for the last 20 years. In fact, I've got this amazing statistic which always stays with me, that America, in its first nearly 250 years since independence, accumulated about $17 trillion in debt. In the last 10 years, they've accumulated another $17 trillion in debt. So this trajectory has really gone vertical. And I think that this is where the big risk lies for America. And my suspicion is that in the next few months, possibly in 2025, I think that the bond market is going to start to revolt, because they're going to see that Trump's going to keep pushing for more tax cuts or, letting spending increase, because there's no incentive for him not to do that until the bond market revolts. Why should a politician stop? Even in India's case or any case, the only check and balance really comes is because they understand that if interest rates go up or if the bond market begins to revolt, we can't do all this.
No, but the big difference in India is that Modi by instinct seems to be a fiscal conservative. At least he'd like to be now. Sometimes there are political compulsions, but he doesn't want to run up these big deficits, and that's what his government has shown over the past 10 years.
Yes, that's right. Because I think that they see India's history. They see, like in the past when, like in 2012, 2013, what happened, when our fiscal situation went out of control. They understand that India, they don't want to have India be seen as vulnerable.
Sure.
America doesn't face that, because so far they've run these massive deficits and they never faced a problem. India's faced a problem in the past. Whenever they've run a deficit, there's been a sort of feeling that, hey, that this can't be sustainable, and other countries in the world too feel that. In fact, my sort of big case is the fact that if you look at most emerging markets today, they are being fiscally responsible. They have changed their habits. But in America's case, it's gone the other way, because there's been no pushback ever.
So you made the point that there's zero interest in foreign investors, particularly in the United States, but wanting to invest in the Indian markets. A lot of the growth that we've seen in Indian markets has been supported by domestic financial institutions, particularly mutual funds.
Yes.
Price earning ratios already quite heated. So given this context, what's your outlook for what you think is most likely to be the trajectory of the markets in the next few months?
Well, I think that it's going to be a bit challenging until, we sort of see this thing turn, which is that the one variable that that every investor in India should look at as to when foreign flows will start coming back into India is when the dollar turns. That until and unless the dollar starts to weaken, then that's when I think foreign investors will return. Like all this other talk that, China's done a big stimulus, some money will go there. I think this is all short-term fluff. Because I don't think that's like sustainable. I don't think China's growth story is so sustainable that people are going to reallocate capital to China, move away from India. I just don't think that's going to happen. But I think that what needs to be done out here is that when the dollar does start to weaken, that's when you'll see foreign inflows come into here. And remember that India is India is one of the best performing emerging markets in the world. So there's, like in India's case at least, there's some interest when you talk to people, but generally the interest of American investors where the large pools of capital lie in going international currently is close to zero.